Hey, Ryan William here for Smartest Data. Live streaming portfolios and commentary on US equities every Monday around 12 noon or a little bit later Eastern and at 6 p.m. or 6:30 p.m. here in Europe. In this video, this video is done in partnership with Finscreener, an online data source that I use to follow US equities, to perform backtests, create portfolios, perform a variety of other tasks. So it's really useful, simple, convenient to use. The link is in the description below. If you wish to subscribe to Finscreener and follow me, by all means use the link. It would really help the channel. Also, there's the link to the online brokers eTORO, FX PRIMUS and First Trade. So in this video, I'll start off with a quick discussion on the US stock markets. There are three main storms which are brewing for the US stocks at this point in time. So we'll go over that. Then a review of this week's portfolio, the 40th for this year, inside a Finscreener and with using Access. Then two stocks to cover, Microsoft and Nvidia. So after a difficult week, the worst in the past month, with the S&P dropping below its 200-day moving average, and technical and selling, this increased losses. This in itself is not a huge issue. Individual stocks and their indexes go up and down all the time. The key is that the summer weakness is entering the earnings seasons. So let's take a look at what's pushing the markets around. If you look to gold as an indicator, the gold price rose to a 10-week high. Investors are looking to a safe haven. Gold is one of these assets, along with US Treasuries, that people look to for safe havens. There are 3 to 4 main storms which are brewing for US stocks at this point in time. First off, traders, they want to see stocks go up and down around, literally playing cat and mouse with the market. So, no problem. Intraday trends can be set, and they are set by the market movements, and intraday traders can profit from this. While market volatilities mean reversing, most daily stock price movements are completely random. Thus, I'm talking to stock investors that are market participants who reasonably have a minimum investment time horizon of at least 12 months. So that's what the market or the profile of the investor that I'm looking for. So looking at stock investors with a time horizon of at least to the end of 2024, these investors must invest with stocks with a total return of around about 8%. So stock price appreciation plus dividends. For stocks rated on a higher valuation multiple, so higher PEs, price to sales or price to free cash flow, the specific equity market risk premium might come over 12%. So that would be a total return for a start. Thus, the major tech stocks, in particular the Magnificent Seven, must be producing a total return of 12%. Stock investors do have legitimate concerns over their return prospects. So what's pushing the stock markets down, and what are the potential remedies? The first and most important issue facing stock investors are rising yields on US Treasuries, in particular at the long end of the US yield curve. It's important to keep in mind, with regard to the long end of the US yield curve, interest rates are expected to increase. There are still turbulence as they go up, but in 2024 the US yield curve should invert. The short-term rates could in fact come down, and that's what the market's predicting for the second half of the year. But this is not where the real action will be for stocks. This will be in the long end of the yield curve, where there could be an increase of around 100 basis points or more. The second is that the terrorist attacks in Israel. The third issue is a broad issue facing the US economy. Then the fourth is selecting a Speaker for the House of Representatives. I thought this would be much easier, but the situation still rambles on. So cut to the chase, without overcomplicating the situation, are the following. Rising yields will be beaten by earnings. So far, the earnings season has been solid. The bulk of third quarter corporate earnings reports have exceeded expectations. This is actually quite normal. Remember, it is better to exceed expectations, always, no matter what you're doing. That's a positive for stocks. Of course, 86 of the S&P 500 companies have reported, and so far 74% have outperformed consensus estimates. The earnings season will continue this week. Major tech stocks in the NASDAQ 100 to report include Google, Intel, Microsoft and Meta. Major industrial stocks scheduled to report are Dow, Boeing and Coca-Cola. Year to date, the Magnificent Seven have performed very well in 2023. Google up 52%, Amazon up 46%, Apple up 38%, Meta up 147%, Microsoft up 36%, Nvidia, the darling of them all, up 189%, and then Tesla up 96%. So let's move on to the fourth stock portfolio for this year, 40 stock portfolio this year on the portfolio construction process. This week there are 8 stocks with a heavy weighting in technology. So let's go over and take a look. Microsoft, Nvidia, Oracle, Adobe, Costco, Comcast, Uber, CVS. Then we go over to the asset allocation, and as you can see, this week there's a heavy allocation to technology, all up 62.5%. The other 3 sectors are healthcare, communication services and consumer defensive. If we look at the analyst rating, you can see 2 stocks are on a buy and 6 stocks are on a sell. If we go down a little bit, we can see the allocation to the individual stocks, the level of correlation, and let's go through the individual sectors. So in technology, all up, there's Oracle, Adobe, Microsoft, Nvidia, Uber Technologies. So the one in the semiconductor, the subsector is Nvidia. In healthcare, it's CVS. In consumer defensive, it is Costco. And also in media, it's Comcast. The stock with the greatest upside at this point in time is CVS Health. And the average potential upside is $117. The stock is currently trading at $69. So a 69% upside. So moving on to Access, and Access is an extremely important part of how we manage our stocks. It's our investment universe. So we're up to the 40th stock portfolio for this year, and all those stocks have been entered. So what we do, the process is much the same as entering in for my portfolios inside of Finscreener. Then finally on to the watch list. You're welcome to stop the video wherever you like, so it's going through quite quick, 10 times pace, but it gives you all the stocks which are in the portfolio. The stock which was added this week was Comcast. So here we are inside of Microsoft, inside of Finscreener, and as we sort of said, the graph has been going sideways. So if you look at Microsoft, the forward PE of 26.4 times, let's go down and take a look at some of the valuation parameters. If you look here, let's blow it out a little bit. So as far as where it is, it's on the lower side of PE multiples going forward in the S&P 500. And in some ways, the stock like Microsoft should be pitched actually against the S&P 500 stocks because it's a major stock in the US market. So if you look at also some other things, if we go forward and look at the PEG ratio, the PEG ratio is actually quite cheap for where a stock like Microsoft is. So all in all, on a valuation basis, Microsoft's not sitting too badly. Let's look at some of the other things. Revenue growth over the last couple of years has been on the upper end in the technology sector, whilst in the S&P it's better than really 96, 97%, or 86, 87% of the companies. So all in all, I think Microsoft is in a good position. And I think let's go over to the next stock, which will be Nvidia. So on to Nvidia. As you can see, the share price has been trading sideways recently, along with the overall market as well. It's a $1 trillion market cap company, currently trading at $414. So if you look at the valuations, current valuation, the PE ratio of 63 times is quite negative, but the forward PE ratio at 30 times is not so bad. And the PEG ratio at 4.68 is high. There's no doubt about it. It's quite negative, but I still rate this stock as a positive. So let's go over to Finscreener and take a look at some of the fundamentals as why you'd rate Nvidia as a buy considering where it is. It is mainly momentum, but let's go over to Finscreener and take a look. So here we're inside of Finscreener and Nvidia, and as you can see, recently the stock has started to track sideways. But if you look at over the past year, you can see the stock has really taken off. And if you look at over the past 3 years, you can see where the stock is headed. So Nvidia has become a real bellwether stock. So let's take a look where we are. Where are we with Nvidia? Do we think we're going to get sort of returns over the next year of 183%? No, not at all. But I think Nvidia is really pitched at one of the bellwether stocks. So let's take a look at the PE ratios and the valuations. Look, everything's off the board with Nvidia. As you can see, it's there's only 7 stocks in the S&P 500 with a high PE ratio. And if you look at forward PE, it's exactly the same type of story. And again, also with a PEG ratio. But where does the real value lie in Nvidia? If we look at the revenue growth over the past couple of years, it's been good, but this is really starting to accelerate. So if I had to sort of push Nvidia, I mean, where could we have a little bit of a problem with Nvidia? I think Nvidia is one of these stocks whereby it's not so much Nvidia is going to be the problem. It's going to be something in the sector or with some of the suppliers. I think Nvidia is in a very good position. Clearly, the markets has really profited from the situation with Nvidia. But as I say, I think one of the key things is what will be the story going forward. Anyway, that's it for this week. So if you like these videos, they're going to be on a weekly basis. We'll go through a couple of stocks. If you like the video, like and subscribe to the channel. It really does help. Also, if you're interested in Finscreener is a great way to follow stocks. And also, there's the online brokers which are there, which is things such as eTORO, FX PRIMUS, and also First Trade. So see you in the next video. It's been a pleasure dealing with you. Hopefully, good investing coming up. The market's in a bit of a difficult situation, but I think if you're looking at 12 months out, the market is in a good position at this point in time. See you next week.